Hello, and welcome to the first lecture of this new section on market entry case interviews. So, the purpose of this section is to help you develop excellence in solving market entry cases to help you crack your consulting interviews. And at the end of this lecture, we will look at what are the frameworks to apply for market entry cases, and we will have couple of lectures to go through that because there are a lot of frameworks and there are different types of market entry cases. So, what are the frameworks? So, what for the market entry cases? Before we answer that, let's look at what are the cases. What do these market entry cases look like? And I would go from left clockwise. And the first case, which is the simplest of the one, is that your client is a health insurance company based in US, and they are planning to expand into India. So, what insurance market segment should they enter? As simple as that. What segment should they enter? Other could be a client is an international manufacturer of electric buses and has a substantial presence in the European market. The client is impressed by the initiative taken by the government of India to promote the usage of electric vehicles, and you've been hired to find out if the client should introduce these buses in India. So, should you or should you not is the question here. The third case that we will deal with is a client is in the business of making anti-smoking pills. The way we have these patches and lozenges in the market to curb the urge of the smoke. The client wants to sell it at a premium price, right? And you've been hired to find out if the product can be introduced in a country like India, and if so, what is the expected target market share, and a feasible price at which the drug should be sold in India. And the last one we will look at is a foreign insurance company has observed very low penetration of the home insurance in the Indian market. It already has its presence in the health insurance and a life insurance segment in Indian market. It is planning to enter the home insurance category. You have to build a go-to-market strategy for the client. So you see a different flavor of the market entry cases. First couple are whether you should enter a segment, what segment should you enter, then goes into dealing how should you enter, what market share, what prices, and then a full-fledged go-to-market strategy. So that's how these market entry cases look like. So what are the frameworks for this is the question. See, the framework depends on the question that you need to answer, and that's the beauty and that's the key thing in answering any strategy question, because the question is in the mind of the person who's asking, and you need to dig deep and find out if they're asking about a strategy question, what question do they need to answer? They want you to answer for them. And the market related questions can be are four here. There could be more, but these are what I could figure out so far. So first is very simple: whether you should enter a particular market or segment, like you see one of the cases there. Then the second could be which segment should you enter, right? It could be either a standalone question or a follow-up question. Then it could be again a standalone question or a follow-up question. What should be your entry strategy? And you will see as we go along in these lectures that entry strategy definition could vary from person to person. So it will be good to clarify, sir, ma'am, what exactly do you have in mind when you say entry strategy? And finally, a full-fledged version of an entry market entry related question is what should be the go-to-market strategy. So these are the four kinds of market related questions. And the useful framework for all of this, you could start with, let's start with the first kind of question, whether you should enter a particular market or segment. And the useful framework is the GE McKinsey framework. This is a classical framework taught by Philip Kotler from my early days, 1980s, and maybe even earlier. It basically says that you, for any segment or market to enter, you should consider two factors. One is you should see whether the industry or the segment is attractive, and then what's your competitive strength of the business in that category. And obviously, you should select if the industry attractiveness and the competitive strength of yours is high in the segment that you are trying to enter. The answer is yes. Otherwise, you need to think and have with a significant thinking cap and see whether it's worth entering that. The we have modified in our consulting the G McKinsey metrics as you see on your screen. So the answer to whether you should enter a segment is basically evaluated in two things. One is market and attractive market or segment attractiveness, and we have broad based the competitive strength to the probability of success, because ultimately the purpose of your entry into a segmented market is to make money, right? And you can make money only if the segment of market is attractive from certain points of view and you can succeed in that. So that's how we say, if you are high on both, if you are a click on both of these and a click and cross kind of analysis, then we say we should enter that segmented probability. So how to determine whether both of these for a market under considerations are, how to determine each of these factors and then determine an overall assessment of whether you should enter a market or segment. So the market attractiveness or segment attractiveness is to be evaluated on three parameters: size of the segment of market that you're looking at. Second is the growth potential. And please mark the word, it's growth potential. It is not past growth, it is not current growth. It is what growth can you get out of this market, what is the potential growth. And third is the profit potential. Again, it is not current profitability or past profitability, but what is the profit potential. And all of these, as you will see along, are qualitative rather than quantitative factors, because that's what strategy is all about. The probability of success, you need to look at three things. What is, if that particular segment that you're considering, what are the key success factors to enter that category? Then you need to say, if that on those key success factors, what are the resources required, and whether you have resources available or can you arrange those resources to have a good probability of success. And if you have high on each of two of the factors, whether you have the resources required on the key success factor, you could say you have high probability of success. How to determine all of these for the market under consideration: the size, growth potential, profit potential, key success factor, resources required and resources available. Let's take a look at that. The size is a function of, you've done a guesstimates, you have learned guesstimates in this course, right? So sizing, you need to get into guesstimating. You need to look at what is the market, what are the variable drivers, what are the dependent variables, and go drill down and make some simplified good assumption and make an estimate there. The growth potential is determined by the penetration of that product in the category. So example, there's a famous example of two salesmen going to an island. So one of the salesmen went to the island and saw no one wearing shoes. Now, no one wearing shoes, if you look at the conventional way, there is no market, right? So the market's growth potential is zero. Other salesmen will say, hey, no, there's no one who wears shoes, and so practically I can sell to everyone. So that is what is penetration, is the usage of the current product in the category. The second thing is, while they may be low penetration, are they willing and able to pay the amount that you need to pay? And that determines growth potential. Profit potential, you basically take Michael Porter's 5 forces model and you look at relatively on whether on the bargaining power of customers, bargaining power of suppliers, intensity of rivalry among the competitors, threats of new entrants, and threat from substitutes. And looking at that, you can classify whether the profit potential is high, medium, or low. Probability of success, you need to start with the key success factors, and these success factors you determine by a points of difference between the successful people, companies in the category versus the non-successful. Once you have determined the key success factor, then you say in each of these key success factor, what are the resources required: men, money, materials, and method. And then you again say, what do I have, what is the level of resources we have, the company has or you have, and what can be arranged. And if you have the required level of resources to a reasonable level, then you say, yeah, I can succeed in this category on the key success factor. So that's how you determine make a decision whether you can enter a particular market or segment. So what do we do in the next module? So in the next module, we look at the next question as a part of the market entry cases, which is a variation of the first question. Instead of saying whether you should enter a given category, you are now required to figure out what segments should you enter. So that involves finding out the segments yourself. And question is, can we use GE McKinsey framework for this also? hold on to your horses. Let's see whether we can do that in the next lecture. So thank you so much for watching this first lecture of market entry cases. I hope you're beginning to learn something new, beginning to enjoy, and I look forward to see you again in the next lecture.